Welcome everyone to another Traders Unscripted on MarketHighs.com. I'm Jeffrey Lin. I think this is one of the most exciting interviews I'll be doing. We're lucky to have the options legend Larry McMillan from OptionsStrategist.com with us today. And if anyone doesn't know Larry, and if you're all serious about investing, you guys should pay attention and look up more of Larry's work that he's done over the years, because there's a lot of great stuff. Anyways, welcome, Larry. Thank you for taking the time to join us.
Yeah.
I heard a funny story about when you walk on the SIBO floor, everybody kind of stops and comes by to shake your hand. How does that feel when you go down there, or do you kind of try to stay away like a movie star does when they go out?
I'm not sure that's exactly true, but I mean, there are some guys down there that, shake my hand or whatever.
Yeah, I'm sure the story gets pumped up a little as they pass it around.
Right. Well, we were shooting a commercial for the Three Gurus, a previous version of it, and the SIBO was sponsoring it, so we went down in the S&P pit there and did a commercial, and of course the guy takes flash pictures, and the traders don't like that.
Yeah.
So it was more like, oh, McMillan's down there doing some ad. What's going on? But
what's going on?
You say you started in the early 70s, even before options even came about, so you've been with this thing the whole way through. Why did you decide to go with options at a time when nobody really knew what it was about or how it would actually perform, and it wasn't really liquid? Isn't that kind of dangerous?
I had my first experience really was I was trading convertible bonds. And the convertible bond actually has an option portion to it. So, I was trading that, and then I was also doing a lot of technical analysis. And that was between like 1970 and 72. And when auction started in 73, my broker said, hey, you ought to take a look at these because they look like they're kind of math. So I got a copy of the Black Holes model, which has just been before. And I was working as a programmer at Bell Labs, so I had computer access and was able to calculate theoretical volatilities and things like that pretty much right away. And, just by a matter of, just working through some things, I was able to figure out, what ratio spreads were, back spread, break-even points, all that sort of thing.
Yeah.
So, I just found it really interesting and a whole lot more fun than just trading stocks. So I guess that's why I really liked about it.
It's a complexity, and having 6 legs, 6 directions, and 6 dimensions versus just 2. Was that it for you? You just like things that's complicated?
I don't think we were that complicated.
Met a lot of traders who are have math or engineering backgrounds who are attracted to the math side of trading until they realize trading is more than analysis, it's more of an art when you actually get into it. So how did you move from, the intellectual side and analyzing how options should work to how they actually do work and trading it correctly?
Yeah, well, I was always trading. I mean, I had some money that I'd inherited, and so I was, trading all the time. It wasn't just theory for me. And then about 3 years later, 76, somebody told me there was a job open on Wall Street for a retail option analyst, so I applied for that job and got it. And so that's when I really started getting much more heavily into trading. And then 3 years after that, like 79, I was running the house account, the proprietary account for Thompson McKinnon. So I traded that for about 10 years. So that, those were pretty exciting times. I mean, that was all the risk arb, all the crazy stuff that was going on in the 80s, which eventually became a lot of the Ivan Boesky scandal and that sort of thing.
How was that learning process going when you were working for your firm over there at McMillan? Because I'm sure when you got into the industry, it was a lot different than just trading on your own.
A little bit. I mean, the theory is still the same. It's just that when you're trading, when you're a proprietary trader, you have a huge amount of leverage,
right,
and very little friction, and hardly any costs at all in a trade. I mean, just the minuscule, really costs hardly anything. So you can actually, and you earn interest on short sales, and so you can set up a lot of positions that make money that are almost arbitrage. So we did a lot of arbitrage. That part was different, but I mean, that's pretty easy to get into once you understand what the arbitrage is. And then we had fairly large positions in risk arbitrage, which is takeover, merger, that kind of thing. And then in '83, index options came along, so then we became a big player of those, mostly seller of those, both sides, puts and calls, in very large quantity. So things just evolved. We were always able to kind of seem to keep up with the next new product and make a fair amount of money on it before everybody else caught up to how to whatever else was going on at the time.
How hard was that to do stuff that people never really did before? I mean, you were pushing the frontier for a lot of these things, or just trying to game things.
I always liked that. To me, that's a lot more interesting, because in the very beginning, if it's a product that's going to be successful, it really does have a lot of opportunities there. It's even like more recently with the volatility options. I mean, I think our firm is definitely in the forefront of this. I mean, we use some hedge strategies that I still have people telling me, well, that doesn't really seem like it would work. Meanwhile, we've made a lot of money with them. So, I'm not going to argue with the guy. If he doesn't think it works, he doesn't think it works. But, I mean, it definitely works for us. And, what happens in the older strategies, if everyone gets into them, say cover call writing, they just basically fast the premiums down on the obvious calls to write to. They're really not even worth writing anymore. So you really have to find something new to do, or you run a risk of writing cover calls that are not adequately compensating for the risk you're taking. Hi, this is Larry McMillan. I'm president of McMillan Analysis Corporation. I'm part of the Three Gurus. We're going to be making a full-day webinar presentation on March the 3rd. I'll personally be talking about volatility derivatives. And we have 8 speakers lined up for that full-day seminar. It's only $99. So if you have a chance, stop by.